The Lion City, we're talking about Singapore here. It's aiming to set the global tone on stablecoins. You thought I was going to make a pun there on roaring, right? Okay, almost. Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's editor-in-chief, Angie. Well, stablecoins are on a roll second week in a row, and this time it's none other than Singapore, aka the Lion City. Monetary Authority of Singapore, or MAS, unveiled a regulatory framework for stablecoins on Tuesday. Now, the Southeast Asian country's central bank said the proposed regulation will apply to Singapore-issued single currency stablecoins, or SCS. All right, so the SCS will be pegged to the Singapore dollar or any of the G10 or group of 10 currencies. Now, the Sing dollar is relatively pegged to the US dollar, so it's interesting there. And that, of course, includes the US dollar, the euro, and the UK pound. So the group of 10 currencies, all the big international currencies. Now, under the framework, key requirements for stablecoin issuers include value stability, a minimum base capital level of 1 million Sing dollars, and it guarantees anyone holding the stablecoin one-to-one redemption within 5 business days. Now, in a statement, MAS Deputy Managing Director Ho-Hearn Shin said the framework aims to facilitate the use of stablecoins as a credible digital medium of exchange and as a bridge between the fiat and digital asset ecosystems. So, what does one of the global private stablecoin issuers think of it? One of the top in the world? Well, Yam Ki-chan of Circle, the firm behind stablecoin USDC, spoke to Forkast and says MAS is helping the industry at a critical time.
With the new stablecoin framework, MAS is among a set of really forward-looking regulators globally that are establishing a clear and transparent regulatory framework for stablecoins and digital assets. The criteria actually reflects a lot of Circle's payment stablecoin policy principles. Emphasis on rigorous standards for reserve asset composition, on segregation of asset and custody, and audits and reporting that really aligns with the commitment around transparency, accountability, and trust that really ensures the integrity of stablecoin offerings.
Okay, so what's a week in crypto without the latest on Sam Bankman-Fried, the man who will be named here by U.S. federal prosecutors? Prosecutors alleged on Monday that the founder of the collapsed crypto exchange FTX made political campaign donations worth over $100 million with customer funds stolen from FTX sister company Alameda Research. Prosecutors claimed SBF hid his actions by directing money away from Alameda into the personal accounts of FTX executives who then made donations in their names. SBF is accused of attempting to use the political influence generated via donations to lobby Congress and regulatory agencies for legislation favorable to FTX. Now, Bankman-Fried's trial on fraud and money laundering charges is scheduled to begin on October 2nd. Meanwhile, the FTX founder, who was under house arrest in his parents' sprawling mansion in California until last week, had his bail revoked after New York District Judge Lewis Kaplan ruled that SBF had likely tampered with at least 2 witnesses, including Carolyn Ellison, the CEO of Alameda Research, and, by the way, his former girlfriend. He has now been locked up in Brooklyn's Metropolitan Detention Center. Now, SBF, as you'll remember, was arrested in the Bahamas in December of 2022, and he has pleaded not guilty to all charges brought against him. All right, staying U.S. stateside, Coinbase, the largest crypto exchange in America, will now be able to offer crypto futures trading after getting an approval from National Futures Association. Now, this makes it the first crypto exchange in the U.S. that is able to offer both spot and regulated futures crypto services. Now, from expansion over at Coinbase to a little bit of contraction news from its competitor exchange, Binance. Yeah, Binance shut down its cryptocurrency payment service, Binance Connect, on August 16th, a little over a year after its launch. Previously known as Bifinity, it was the exchange's fiat to crypto payment infrastructure launched back in March 2022. It enabled merchants to process payments in over 50 cryptocurrencies and allowed users to make crypto purchases via traditional methods like MasterCard or Visa. Now, a Binance spokesperson told Forkast that the closure of the service is due to changing market and user needs. Well, we certainly can understand that. Meanwhile, in the US, the exchange filed for a protective court order against the Securities and Exchange Commission. Reuters reported Binance is saying the regulator's requests for information were overbroad and unduly burdensome. In June, the SEC filed cases against the crypto exchange, its US platform, and CEO Changpeng Zhao for securities violations. All right, let's get into all of that and more and bring in Chao to break down all the developments in the crypto world this week. He's the founder of crypto investment fund No Limits Holdings and also current board member of Binance US. Jin, it's good to see you again. Let's get straight to it.
Thanks for having me. Great to be here.
All right, let's talk about a little bit of the family business here. Binance Connect, the service for fiat to crypto payments, was shut down. And being a Binance insider, what do you make of this news?
I've had a front row seat with the ongoing impact of regulatory action on Binance US. I'm a bit limited about what I can say, but it's pretty clear that at least in the US, a lot of banking partners are hesitant to partner with the industry in general, and a little more specifically with Binance, given the number of investigations that are ongoing. That said, some of this may be spilling over into other parts of the world. I know there are some regions in Europe that have started to not bank crypto as well. There are some newer startup banks that are a little bit more embracing of crypto, but I do believe that Binance continues to engage, and it probably has a fairly high priority to try and find a partner that can be a stable provider for fiat services going forward.
All right, talking macros, the latest Fed minutes show the US central banker is still needing to see a little bit better news. It still regards inflation risk as a serious problem, which could mean more rate hikes here. Ratings agency Fitch dampened investor sentiment further by suggesting it could downgrade a number of major US banks. What's your outlook against all of this for crypto?
Similar to what we've seen in past cycles, that a lot of price movements will sort of follow trends with Bitcoin, and I think that is still going to be tied to the macro environment. As you said, there's a lot of news around deflation and holding interest rates. I think that doesn't really tell the whole story, and a lot of these data and indexes are quite misleading. So I think we're still in for quite a bit of damage to fiat currencies, and I think over the short run, you could see a little more market correlation again, TradFi versus crypto. If that stays, then I actually think the negative news we might see in TradFi will be positive for crypto.
And what did you make of payments giant PayPal launching its own stablecoin?
Yeah, I think it's a good, at least indication that you have large corporates like PayPal using this as an option. But I think my understanding is it's going to be a little bit more of an internal payment and clearing mechanism, more than sort of a public asset that people can trade in and out of. So it is an indication that you have entities, and particularly large fintech entities, that are embracing blockchain in general, and then specifically using it for clearing. But this is something that I think is also vindicating, for example, even old school projects like Ripple. So it's a good indication, but I wouldn't read too much into what that broader impact is on the market.
Jin, you're known for your prediction of Bitcoin prices. What's your crystal ball showing you now?
Yeah, well, I gave a range last time I spoke with you, which has been almost 3 quarters. And I think at the time I mentioned 150 to 200 as a peak for Bitcoin. I would still stick with that. It'll probably be maybe closer to 150 now, but I would still stick with that range as a potential peak for this cycle.
I want to ask you about the value of HBAR tokens surged after FedNow added Drop, a Hedera-based micropayments as a service provider, and we really saw activity there. What are your thoughts on Hedera and the future landscape of real-time payments and blockchain-based financial solutions?
And an acceleration in payment adoption would be a huge driver for the industry, and I think is going to be a huge driver over the next over the long term. Unfortunately, for now, you see a lot of price action on this type of news because there's a lot of traders out there that haven't found good stories around to speculate on, and I still think that that's what's driving a lot of these extreme price movements.
All right, thanks so much for that, Jin. I really appreciate you joining us today.
Thank you.
All right, time for a quick break, but we will check in on the NFT markets when we come back. Stay with us. You're watching Forkast IQ.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. I'm your host and editor-in-chief of Forkast, Angie. All right, I got to tell you about sales volumes here in the NFT markets. It may be struggling, but we just hit all-time highs when it comes to the daily transaction numbers. Over 640,000 NFT transactions just took place in a 24-hour period this week, and that shows interest in NFTs is definitely not waning, though it might appear everyone out there is kind of looking for a deal right now. Let's get in our very own data analyst, Yehudah Petscher, to talk about that and a whole lot more. Yehudah, are these exciting times or what?
Well, I've really been looking forward to talking with you about NFTs this week because, well, we're finally in the green again. Feels like it's been forever. Nonetheless, great to see us in the positive. Past week, we saw $101 million in sales. That's across blockchains here. First time we crossed that $100 million threshold since that week in July. That was the week of July 10th when we saw $123 million in sales. It's not the only way to measure growth. I like to look at buyers, I like to look at sellers, and I like to look at total transactions. And that's what I want to focus on is total transactions. 2.8 million transactions. That's across blockchains again last week. The highest we've seen in 18 months. You have to go all the way back to January, February 2022 to see similar numbers. Now look, that was the all-time peak of NFTs. Comparing that to now, which is the most substantial bear market NFTs have seen to date, but it's something to look forward to at the very least. Good times are certainly ahead eventually. As far as what's moving this market, well, it's a different type of project. Now, for the past couple of years, we've been used to these smaller collections, these 10K edition collections, typically a profile picture. But in this market, especially the past few months, we've been watching very high supply collections at much lower prices, extremely high volume, and that's what we're seeing happen here. Between D-Market, Sorare, Gods Unchained, and DraftKings, the 4 collections have combined for over 800,000 transactions. They're making up a third of the total global transactions all on their own. Yes, we'll always have the PFPs and collectibles, and they'll always have their market, and they will do well. But to bring in the masses, you really need the high-volume, lower-priced NFTs. Now, as far as what's been moving the market, certainly DraftKings, like I mentioned before, they've had a huge week over on the Polygon blockchain with their fantasy football NFTs. They've done millions in sales, over 8 million in sales in the past 7 days here. So they have NFL football, fantasy football NFTs. And with the NFL season getting ready to kick off, well, you have these fantasy football players that are just eating up these packs and putting together their teams and ultimately competing for some prizes, some cash prizes that's offered by DraftKings. You also have DeGods, who had a big announcement last week with their Season 3 artwork. Well, it was unveiled. Collectors did not like it. They made their feelings clear. So the team went back to an older version of art that, if they hadn't shared it yet, well, they brought it back to life. They showed it to the community. It's very bright. It's very colorful, and collectors, holders really liked it. So that ended up being the finalized Season 3 artwork. DeGod's sister project or companion project, Utes, you may recognize that name along with DeGod's from earlier in the year. Both collections lived on the Solana blockchain. Both moved chains over to Ethereum for DeGods and Polygon for Utes. Well, now Utes is moving from Polygon to join DeGods over on Ethereum. So under the same roof, Polygon had given the Utes team a $3 million grant to build over on Polygon. They're returning that money, as you should expect. That money will now go towards fostering and building existing collections in the Polygon ecosystem that may be much needed at this point. In the past couple of weeks here, we had the Cyberkongs announce that they were leaving Polygon for Ronin. Now you have the Utes announcing they're leaving Polygon for Ethereum. It is certainly worth watching and keeping an eye on just how healthy that ecosystem is. Also making waves this week is Coinbase with their new Layer 2 blockchain called Base. Already doing big numbers, attracting buyers. They opened their bridge early, and we saw tons of Ether being bridged over there to partake in that ecosystem, including an inaugural art drop from a big Ethereum artist named DK. He partnered with Cosmo. They did this art drop. It ended up selling over 60,000 editions of this NFT, priced at 0.01 ETH. So Coca-Cola is actually getting in on the Base ecosystem, and so they've launched some NFTs over there. Parallel, who is another high volume, lower priced NFT project that I think will be pretty serious in the long run. They've just minted some of their NFTs over on Base. So you just love to see the ecosystem growing and expanding beyond just Ethereum. Rec League, I just want to end on this. They have their big mint this week, their first of 3 mints for the year. The next few mints, we haven't gotten a supply count yet, but they may push the collection up close to 1 million total NFTs in the entire collection. That's what this game aims to do, and I think they have a chance of being successful. There will be an NFT version of the game, a non-NFT version of the game, and it's important to see how the non-NFT version of the game fares. If it's successful, look out. We may just finally have our P2E gaming rush on the blockchain that we've been anticipating for so long. So a lot to be excited for. We'll be watching for it all, and we'll bring you all of those updates as they come in. We'll see you later.
All right, thanks as always, Yehudah. Appreciate that very much. On that note, let's take a quick break and focus in on all that's happening in crypto world in Australia. Don't go anywhere.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
All right, thanks for staying with us. You're watching Forkast IQ. We're talking about Australia. It is the 12th largest economy globally based on gross domestic product, according to the World Bank. Okay, but how does the land down under stack up in terms of blockchain and crypto developments? Well, we sent Forkast's Jenny Ortiz to find out and let you know all about it.
Like many countries, Australia's journey in blockchain and cryptocurrency begins in 2013, when a number of crypto exchanges opened in the country. A decade later, mainstream adoption of the technology and crypto is yet to be seen. Recent debacles in the crypto industry, such as implosion of Terra Luna, collapse of Three Arrows and FTX exchange, and the weak macroeconomic situation is not helping as well.
Sentiment at the moment is a little bit down versus where it was 12 or 18 months ago.
Needless to say, crypto started the year on a high note in the country. Australia overtook El Salvador and Poland to become home to the fourth highest number of crypto ATMs in the world. Speaking to Word on the Block, Caroline Bowler of Australia-based crypto exchange BTC Markets explained where the optimism is coming from.
There is a cautious note of optimism in Australia. And I say that as somebody who's been sitting in the crosswinds as sentiment has blown one direction or the other. And I think it's as much to do with the fact that with all of the carry-on that's happened in the industry, it hasn't been Australian exchanges. It hasn't been Australian projects.
Lachlan Feeney of Australian blockchain firm Labris shared the optimism about the digital asset.
I think that interest rates can remain high. The industry can still do reasonably well.
According to 2022 data from Finder, 3.3 million Australians own crypto. The country ranks 9th out of 26 countries for crypto adoption, with Bitcoin, Ethereum, and Dogecoin as the most popular cryptos. Although cryptocurrencies are legal in Australia, they are not legal tender, which means while merchants can accept them as a means of payments, they are not obliged to. A number of businesses such as gas station and convenience store chain OTR are already accepting cryptocurrency payments. However, macroeconomic situation plays a role as well on how Australians view crypto and blockchain. Just like the rest of the world, Australia is battling multi-decade high inflation levels. In June, the country saw Reserve Bank of Australia or RBA hike interest rates to their highest in 11 years. And like many other industries, blockchain is bearing the brunt.
It's particularly difficult for new startups to raise capital in the current environment at the moment. So to say that there's no impact at all it would be lying. Like there is definitely an underlying impact. The blockchain industry has definitely been impacted by the larger macroeconomic conditions.
Crypto debanking is also a threat in Australia. Recently, a number of banks, including the National Australia Bank and the Commonwealth Bank, have blocked payments to cryptocurrency exchanges to prevent scams. For industry leaders, there's one solution to help blockchain in the country: regulatory clarity.
I think the industry will be much better off once we receive that clarity and also have some clarity around how to sort of make these assessments of which categories certain tokens might fit into on our own.
We need legislation to come in. And certainly here in Australia, we've seen a change in successive governments, both of which have had crypto regulation as part of their remit.
There's a range of laws in Australia that regulate crypto-related activities. Among them are Australia's financial services and anti-money laundering and counter-terrorism financing regimes. Also earlier this year, the Australian Treasury engaged in an exercise called token mapping, in hopes to provide clarity to stakeholders on how and the extent to which the current financial services regime applies to crypto products. And last March, Senator Andrew Bragg filed a new bill, the Digital Assets Market Regulation Bill 2023, which provides digital asset exchange and custody authorization and requirements. While some may view Australia's token mapping and crypto regulation as developing at a slow pace, Ursula McCormack, partner at law firm King & Wood Mallesons, who serves clients in both Hong Kong and Sydney, told Forkast, Australia is not taking crypto regulation as a race.
Australia is both behind as well as ahead on crypto regulation. And what's really interesting about Australia is that it is taking its time. It's not leaping into formulating a crypto regime, racing to implement FATF recommendations as written or to follow any other market initially.
The Australian Taxation Office regulates crypto in the country. The agency considers cryptocurrency as an asset, specifically as property for tax purposes, and is subject to capital gains tax. Also in March, the RBA outlined potential use cases and providers for a central bank digital currency or CBDC. 2 months after, the country successfully made its first foreign exchange transaction using EAUD as part of its live pilot.
What I expect to see from that EAUD project is not necessarily, straight away all of those projects launching. Some will, and we've been working on some of them, but you will see some fine-tuning of regulations to better reflect and accommodate this new world of new money.
Despite the current landscape, industry leaders remain hopeful the country will make a mark.
I would really like to see Australia become a bit of a global hub for blockchain technology. There's some companies looking to go to the UK, different areas in Europe. I would love to see some of these companies come to Australia and build Australia up into a blockchain hub.
What we all dream of is sensible, pragmatic, risk-based regulation. And that not only responds to the challenges and new risks that the technology poses, but also responds to the unique ways in which that technology can solve and diminish risk.
As the government continues to refine its regulatory approach, striking a balance between promoting innovation and safeguarding investors, and blockchain firms try to develop amid uncertain times, we'll keep watch on how Australia will navigate this dynamic landscape. Jenny Ortiz, Forkast.
Well, that's a wrap on this week's show. Thanks for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching from home, the trading floor, wherever you are. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Editor-in-Chief, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.